it's time to listen to our chief guest. We have with us another very special person as our chief guest. She is Miss Claudia Segre, chairperson of GSDS2021 Italy. Her career started in leading Italian banks, specializing on international markets and in the deepening of global geopolitical dynamics and related economic financial correlations, holding positions of responsibility in the operations and managerial room in the parent companies of Gruppo Intesa, Unicredit, and Credem. A former member of the Council of Experts of the VI Finance Commission of the Chamber of Deputies and was chairman of the Board of Education of ACI FX International from 2012 to 2015, now honorary member of ACI International, founding partner of ASEAN Forex, former vice president of ASEAN. She was Secretary General of ASEAN Forex from 2009 to 2016 and is currently Director in charge of publications and member of the Board of Directors and Presidency. She has collaborated with several Italian universities and is now a lecturer for ASEAN Forex on advanced trading and macroeconomic variables and international scenarios. Member of the Equal Opportunities Commission of the Academy of Lindsay, Forbes named her one of the 100 most successful Italian women of 2019. Co-author of the book Italy of Autonomies to the Test of COVID-19. She is the president and founder of Global Thinking Foundation and Global Thinking Foundation US. She is an activist on gender equality, the winner of GCPIT's Global Women in Leadership Award 2021, TEDx Speaker 2021. Let me proudly invite our chief guest of today, Ms. Claudia Segre. GCPIT is honored to have you with us today. Over to you, Ms. Segre, for your address.
So thank you so much, Aparna, for this introduction, and thank you, GCPIT and the partners for having me and inviting me in order to elaborate a little bit on this goal 8, and particularly regarding sustainable future of SMEs and COVID resilience for long-term economic growth. And first of all, let me start saying that COVID has produced highly asymmetrical effects on businesses with particularly significant consequences on sectors that have been affected to a greater extent by the lockdown and subsequent social distancing measures, like the third sector of services. And the territories characterized by higher levels of social sustainability were better equipped to mitigate the effects of unemployment, which conversely can generate significant impacts on the fragility of families and the number of people who enter a poverty situation. And we have seen also the result of the support coming from the government and the different results between US and China. SMEs account for 75% total employment across most of the OECD countries and nearly 90% in Greece and Italy. And as a result, they were hit especially hard. 2/3 of these experienced a fall of more than 40% in sales. So SMEs proved more vulnerable than larger firms in other ways too. And SMEs, you have taken in consideration that hold lower level of cash reserves to bridge long period of low or no activity. And for example, in US, half of SMEs operate with less than 27 days of cash reserves. And despite the significant increase in uptake of digital tools seen during the crisis, many SMEs were still unable to pivot rapidly to alternative business models. And as you know, the European Union launched the Next Generation EU funds in 2020, a community financing plan for recovery with an endowment of 750 billion euros. The program aims to mitigate the impacts of the pandemic and relaunch private investment with a strategy that has its pillars on digital transition, green transition, and social and inclusive transition. So similar program was launched also in US and many other G20 countries. Italy has the presidency of G20 in this year, 2021, and share with UK COP26 presidency. And Italy will be hosting the pre-COP in Milan next week. Crucial target of zero emissions in 2050 was already announced and requires heavy investment in national production systems to transform the production system and make them sustainable from an environmental point of view. And the Recovery Fund will provide resources and incentives to facilitate this transition, but business investment will play a key role. So it's therefore helpful to correlate the levels of environmental sustainability of the individual provinces of the world with the estimated loss of capital and investment to identify the territories that could accumulate the most excellent delays. So starting from digital transition, digitalization is not new, but thanks to COVID-19 improvements in the accessibility of programming language and regulatory push, its deployment is now both fast and broad. Most countries have seen meaningful improvements in connectivity, for example, but very few have achieved any progress in the human capital index, meaning that the technological deployment is far faster than the improvement in the ability of most in mastering the technology. This is, in my view, one of the most key bottlenecks that are likely to keep productivity gains elusive. Priority are related to a recognition that beyond a certain level of divergence in financial power, there cannot be a genuine level playing field between businesses. Therefore, it makes sense to have different rules to mitigate some of this imbalance. For example, accentuating some of the simplification of the regulation, which are for the benefit of SMEs already in some areas, going beyond that. Perhaps by linking them with the effort of reducing the environmental impact of human activity. Simplification should also target recruitment and labor use to make it easier for even small companies to add and cut labor depending on their business volumes, and the change in the funding of certain social buffers with an expansion in the areas and facilitating lifelong learning. In certain circumstances, it makes sense for governments to create digital infrastructure that compete with the private sector as a way to reestablish the competitive environment and spread the benefit of digitalization to small-sized entities by creating a deeper platform where anybody that wants to can make type of transaction that involves different sector of SMEs, and the state would gain from immediately generating a network that is big enough to compete with the established one, which would give visibility to different segment activities starting from manufacturing sector, gain in terms of revenue collection, collect precious data, which it could not have otherwise, and generate a tool that can be used to give visibility to any micro, small, and medium-sized entity which would have a tougher time gaining visibility online. Moving to number 2, green transition policies. This is where sustainable finance with green bond issues, so opportunities, for example, comes in, which refers to investment decisions that integrate within the traditional financial analysis, environmental, social, and governance, ESG aspects, generally related to the creation of long-term value. Compliance with the principles of ethics and transparency in the conduct of business and in the processes of corporate choices from which proper management of corporate governance derives is often the basis of for creating sustainable value for the environment and society as a whole. So, compliance with national or international laws and corporate risk management is essential, but ESG issues are not just an obligation to be fulfilled. It's a door to new opportunities for SMEs. The COVID-19 pandemic that has disrupted the world economies in the last year has also contributed to pushing by investor, institution, and retail towards sustainable investments, intensify scrutiny on the ESG performance of company. And also the numerical data evidence, the consequence of all this is that we have so many ESG funds now, ETF, and other financial instruments. And the rise in the weight of sustainable investments, equities, or bonds on the financial market are closely linked to the activism of global institutions. So to achieve ambitious objectives envisaged in terms of decarbonization, the G20 institution immediately conceived finance as a critical tool for mobilize the capital necessary for the execution of the Green New Deal, also for the SMEs. The structure of the policies of the EU Green New Deal inspired, it seems, Biden policies, as was admitted by Obama during an interview, taking in consideration that since the ascension in 2018 of the Green New Deal policies as defined, the terms of global climate debate, perhaps no other climate policy in history has been so successful. So, however, the Commission is not only the institution involved in fight against the change climate and is determined to lead the continent through a transition of phase. Also helped by the EIB for investments and the ECB announcement regarding climate change. Altogether, recognizing that global warming is a tangible impact on the real economy and therefore on the balance sheet of banks, which can cause volatility and determine the long-term consequence on growth and lending. So by dividing both types of financial instruments available to savers by the nature of issuer, we have green bond and social bonds. But actually, on the emissions companies contribute only marginally to the social bonds, and banks are more committed, and the number of those who choose to assign wins of emission for social purposes. The available data shows that social bonds make up only 15% of the total sustainable bond issued by banks. So according to a recent survey of the OECD, 89% of the companies interviewed say they were open to considering the issuance of sustainable debt. The reluctance of companies does not appear at all. So therefore, an obstacle in assessing the growth potential in the sustainable sort of mini bond market, especially for SMEs facing the same success of green bond and social bond. So the SMEs is facing tough challenges today, and the pandemic has challenged practices consolidated in dialogue with the stakeholders. And the search of competitiveness on a global scale to the detriment of minor oversights on social and labor policies are paradigms under serious discussion today. And the SMEs world must rethink past industrial choices to seize the strategic opportunities related to sustainability. For example, it's possible to think a more strongly localized reshoring, a sort of supply chain, a 0 kilometer. And it's necessary to know how the raw materials at the base of manufacturing industry are produced, what are working conditions can be considered acceptable, and the regulation on the quality of the product purchased. Also using the so-called ecological product label, EPD, environmental product declaration. So similarly to ESG ratings, also the product label are very essential in order to lever for the competitive improvement of SMEs, helping to lower their operating and management costs in perspective financing and to favor an overall increase in company value in the medium term. And the ESG assessment worldwide identify the behaviors to improve relationship with stakeholders and strengthen the corporate strategy. So this disclosure also, by integrating the annual financial report with a non-financial report, provide investors and other stakeholders clear and consistent information regarding risk analysis, financial performance, and ESG achievement. It's also necessary that the SMEs be adequately supported by instruments targeted financials and clear legislative framework. They can play a significant role in the growth of G20 economy and the broader strategic objective of the Green Deal. The contribution of SMEs will be crucial for the very success for all transition strategies. Finally, as I already mentioned, the ESG rating is a fundamental tool to provide an integrated assess of business risk. Indeed, it is necessary to transform the approach to risk analysis from a predominantly financial perspective, economical, to an overall logic in which all ESG factors are represented into the company's performance. ESG incorporates social responsibility strategy exactly like sustainable finance are substantial part of the puzzle for a new, better, inclusive economic growth in line with Goal 8 achievement. But there is a third crucial factor, and I want to conclude that we have to refer to the social transition, the S of ESG, women financial inclusion. Women, we have an important opportunity to move into higher skill work through trade, but this opportunity depends on putting in place complementary policies that increase investment in human capital, particularly in the areas of education and health. And we have discussed such a lot with GCPIT, and such investment which have become even more relevant in the post-COVID-19 recovery. So it's a fact that countries that are more open to trade as measured by the ratio of trade to gross domestic product have higher levels of gender equality. And trade liberalization is linked to a greater accumulation of education and skill and increased gender equality. Improved women's rights have also promoted more trade. This has led to a virtuous cycle between increased trade and gender equality. In contrast of high level of gender inequality are linked to lower product and export diversification. Today, women represent almost 40% of high-skilled service workers in high-income countries and 33% increase from 1991. So although this share represents only a little part of highly skilled workers in low-income countries, the employment growth potential continues to increase, and we share with GCPIT the hope and the commitment so long as it becomes a permanent trend. So sustainability leveraged by digitalization is an equal environment could be the successful algorithm on the path of Goal 8. And to close all these gaps that we have mentioned, it's clear that we need to create opportunities that can be seized by making international trade more inclusive. This highlights how governments, international organizations, and private sector can collectively, all together, through complementary initiatives, create the condition to ensure also that women benefit from trade instead of being left behind. And thank you to this event, an event like this one, and due to the commitment of the GCPIT and all partners, strong commitment, building partnership worldwide, we are on a right path to promote inclusive and sustainable economic growth, full and productive employment, and decent work for all to fully achieve Goal 8.
Thank you so much, Ms. Segre, for that informative session. And without your support, such an event would not happen. So thank you so much for all the support you have been giving to GCPIT. And thank you so much for joining us today in the summit.
Thank you for the attention.
Thank you. And with this, we come to the end of our opening session. We'll be back after a short break.